Welcome to the Business Standard Banking Show. Credit growth has returned to the banking system this financial year after a gap of 2 years. Year-on-year credit growth was 14.5% as on July end, as compared to 6.1% in the previous year. Deposits, however, growing at a slightly slower pace at 9.1%. Banks have reported healthy profit in the first quarter, but faced mark-to-market losses on their bond portfolio due to rising yields. To talk more about the growth opportunities and the challenges faced by the banking sector and also Bank of Baroda in particular, we today have Sanjiv Chadha, MD and CEO of Bank of Baroda. Mr. Chadha, welcome to the show.
Thank you, Manojit.
So, sir, Bank of Baroda has reported 18% growth in global advances in the first quarter, which was a bit higher than the industry. Do you see the trend still continuing in the second quarter itself?
So I think there are two parts to the answer. One is that, as you very correctly said in your opening remarks, we are seeing some strengthening in terms of the growth trend. So the growth is likely to be better as compared to the last year. But it's also equally important to bear in mind that the first quarter last year was unnaturally depressed because of the second wave for the industry and particularly for us. So I think there may be some moderation that we might see as far as the growth is concerned, but nevertheless, it should be significantly better as compared to last year.
Right. So the growth is coming both from the corporate sector as well as retail sector, isn't it?
Absolutely. So I think we had seen consistent growth from retail even last year. It was fairly resilient. When it came to corporate, I think we are seeing an improvement there. Equally, I think when it comes to the corporate sector, because the liquidity was surplus, a lot of demand again got diverted from the banking sector, which again, as you talked about the fact that interest rates are rising, so that demand is coming back to the banking system. So the contribution of the banking system to growth and to financing should be more this year as compared to last year.
Right. Sir, but are you seeing demand for greenfield projects, sir, from the corporate sector?
So I think there is a change which has happened. Over the last few years, there's been a consolidation trend in the industry. And a lot of capacities have got concentrated among the stronger players. Now, and a lot of investment demand is actually coming from these stronger players. So therefore, while the demand is there, it is also very good quality demand. So my own sense is that even as we go forward and as capacity utilization improves, a large proportion of demand will come from these stronger players in the sector, which augurs well for the quality of credit that we put out.
Right. So coming to the retail credit part, you have seen good growth in the unsecured personal segment. Was that the intentional or as a one-off thing you see that happened in the first quarter?
So I think we have broadly seen a trend where for us, retail growth has been faster than corporate growth. And I think that's a trend which is likely to continue. If you look at a balance sheet, 50% is corporate. And I believe over a period of time, a correction of that little bit of bias is something which will be good for the bank. But coming to your specific question about unsecured personal loans, this was a category which was relatively small for us. And this is something which has become much more important for us after the digitalization initiatives that the bank took. You might recall that in August last year, we had launched Bob World. Now, within 1 year, Bob World has gathered something like 22 million customers. And therefore, it gives us access to our entire database, customer transactions, and it is possible to underwrite good quality unsecured loans. So since this category was relatively small, we see large growth. But I think even as we go forward, this should be a larger part of a balance sheet. But probably the growth rates will moderate since the earlier growth was on a smaller base.
So overall growth, what kind of credit growth you are projecting for the current financial year?
So our sense was that as compared to the 8-9% growth in credit for the system last year, this year we should see double-digit growth. Our estimate was about 10 to 12% for the year. And the stance of the bank has been that we would want to grow as per industry or faster, while also trying to improve our margins. I think that's how we really continue to look at that. We expect industry to grow between 10 to 12%, and we believe we have the potential to grow a bit faster than that.
Right. Coming to deposits now, Bank of Baroda's deposit growth in the first quarter was, I think, 10.9%, mirroring the industry trend that deposit growth is lagging the credit growth. Bank of Baroda has recently launched a new deposit scheme, Tiranga deposit scheme, offering 6% deposits. Do you see there a scope to increase the deposit rates further, or you see the deposit rates have peaked?
So I think First, in terms of growth, I think it is quite natural that when the economy is relatively slow, you will find deposit growth runs ahead of advances growth. And when the economy improves, the advances growth will pick up. And for some time, it might be faster than deposit growth. So I think that's something which is part of a normal cycle. In coming to rates again, I think there is no doubt about the fact that we were because of the liquidity surplus situation, we were in a situation where rates were actually in real terms negative. That is not something which can or should continue indefinitely. So there will be a correction that will happen and rates will go up. They have begun to go up, and I think there may be still some scope for rates to increase as we go along. And I think that is something which is healthy for the economy, healthy for the banking system, because at the end of the day, if banks want to attract depositors to place deposits with the bank, I think giving an inflation-adjusted return which is positive is important.
Coming to Treasury Operations, sir, now most of the banks, including Bank of Baroda, has taken MTM losses in the first quarter because yields are rising. And if you see the RBI minutes of the monetary policy, there are indications that interest rate could go further. So, what is really your strategy to manage the yields, the Treasury Operations going ahead?
So you always, again, try to make sure that the duration of the portfolio, particularly the AFS portfolio, is low, so that the impact is something which can be contained. What we saw, of course, in the last 3 or 4 months was that the rates went up by significantly higher margin as compared to what we might have expected. Everybody was expecting that rates would normalize, but the expectation was that the normalization might be over an extended period of time, say 12 months. But as it happened, the increase actually happened in a very short period. And what we have seen is there has been, again, a little bit of pullback after that. But since there was a very sharp increase, which was concentrated in one particular quarter, there was an impact on mark to market. But again, I would say we should not, again, get overly exercised about that. It is part of a normal interest rate cycle that when rates normalize, you will benefit in terms of yield on loans. But conversely, there will be a mark to market impact on your investment portfolio.
I was coming to that, sir. Despite MTM losses, Bank of Baroda reported healthy profit growth, mainly because of lower provisions and improvement on the back of improvement in asset quality. However, the restructured pool remained elevated at 2.5% of the total loans. Is there a concern that some of those restructured loans could turn to NPA and worsen the asset quality?
So I think there are two figures that you might want to look at, or three figures you might want to look at together. One is the restructured pool that you have talked about. Then there is the SMA book, which is there. Now, the SMA book of the bank actually has come down from about 2.5% to less than 0.5%. So that would seem to indicate that there is no stress which is building up in the balance sheet, and we are on the path of recovery. The third figure that, again, is relevant in this context is the net NPA figure, which for Bank of Baroda has now come down to 1.5%, which means that your existing stock of NPAs is very well provided. So I think, and the fourth figure, again, which you might want to look at would be, again, the slippages and the credit costs, which again have shown a consistent downtrend. So to my mind, the upside that we have seen in terms of lower provisioning, lower credit costs is likely to continue because there's been a secular improvement in the corporate credit cycle that has happened over the last few quarters. And if there are still some vulnerabilities, for instance, it is a fact that the MSME book is something which can still have a bit of a downside. But given the fact that the corporate book is 50% of loans, and that is something which is of very good quality now, well seasoned, well proven, I think overall credit costs should continue to come down, and that should have a positive impact on the profitability of banks.
Right. So, I mean, the gross NPA ratio and the net NPA ratio is also a function of the credit growth, which is going to be healthy. So, where do you see your gross NPA and net NPA by the end of the current financial year?
So, look, the gross NPA is a figure which, again, gets impacted by a number of factors, as you said, by top line growth, also by some write-offs, which you have the capacity to do. Net NPAs is important again because that really is the downside that you still have on your balance sheet. That is now down to 1.5% for us. And I think that should come down further. And that, to my mind, gives a lot of comfort to us in terms of how we are positioned as a bank.
So you expect net NPA to fall below 1%?
I hope again that the improvement that we have seen over the last few quarters continues the next few quarters also.
Coming to net interest margin, sir. your margins contracted Q1Q basis to 3.02%, mainly due to higher growth in the low margin overseas book. Do you expect the overseas book to continue to grow at a healthy pace? And what is your guidance on the margins?
So I think the margin impact was as much on account of the fact that in the last quarter of the last year, there were some recoveries which were there, which actually went to the interest line. Adjusted for that, margins actually had been fairly stable. You're right that the overseas book has grown by nearly 30% YOY, yes, and that has some impact on margins. But our guidance still is that we believe that we should get about a 10 basis point improvement in margins during the year. So our sense is that the overseas book can still grow. And just to again put it in context, that why did we see this kind of growth? So last year, what had happened was that because of the high liquidity in the banking system, the spreads on highly rated domestic corporates had contracted very significantly. So it made sense to pursue some growth opportunities internationally where you were getting better spreads. So as again interest rates normalize in India, a larger proportion of growth will come from the domestic market, and that should also have a positive impact on margins.
On the other hand, since fixed deposit rates are increasing, CASA could come under pressure. The CASA growth may not be there as much as you wanted. Isn't that a negative for the margins?
So I think to some extent you're right, but I think what we were able to do was to utilize the opportunity over the last 2 or 3 years to significantly improve the CASA proportion on a balance sheet. So when the bank actually amalgamated on 1st of April 2019, the CASA ratio of the bank was 37%. Today it stands at 44%, which is fairly decent. So which would mean that as the interest rate cycle changes, as deposit rates go up, the proportion that is going to get repriced will be relatively smaller as compared to what it would have been if the CASA base was lower. And I still believe that there is still scope for CASA to actually again grow a little faster than term deposits this year also.
On that note, sir, thank you very much for speaking to us. And it was a pleasure talking to you.
Thank you, Manojit.
Thank you, sir. Thank you so much.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.